How to trade the futures market, not the spot this time around, but the futures. There's a few things you actually need to make sure that is actually right before even beginning to trade. The first one is the BTC USDT here. If you're trading BTC USDT, you have to click on it and make sure that it's on BTC USDT. Okay, not BTC USD, but BTC USDT. Make sure it's on BTC USDT perpetual. Okay, BTC USDT. I'm just repeating it consistently so you know that it has to be on BTC USDT, not BTC USD. Then the second thing to take into consideration is this cross here. Click on it and turn it to isolated if you're new to trading. Cross is usually for the advanced traders, so we switch it into isolated. The third thing to take into consideration is this USDT here at this point, close to the order value. You have to make sure that the value is on USDT, not in BTC. The calculation. So it's currently in USDT, so it's fine this way. Now, what we want to do is to calculate our order value. Right? Now, we now have to go back to the chart and calculate our order value. Now, in order to calculate our order value, the first thing you need to have is a working strategy or a system that you want to consistently keep trading. Okay, and then after that, you want to make sure that you have capital, which is for this example, we're using $1,000 as our capital, and we want to risk 1% per trade. Initially, it looks like since we're risking 1% per trade, that means we need to have we should just come to this order value here and then put the $10, which is the 1%. But that is not how it works. In order to calculate the order value, there is a certain calculation that needs to be done. Now, in order to calculate that order value, you need to look at order value equals to amount risking divided by percentage to stop loss. Now, in order to take a trade, you need to first of all have a strategy that works, right? And using our strategy, which is looking for trade from a level of strong buy and strong sell, right? And you're looking at this now, you can see a level of consolidation here before price started moving to the upside. And now this makes this point a level of strong buy. Now we're expecting price to come back into this level of strong buy in order to look for what? A buy. That means we need to bring in our long position to bring it to this point where if price gets to this point, we'll be looking for what? A buy. And now we have to drag the stop loss below, right? And then drag the take profit to at least a 2 to 1 risk to reward ratio, which is what we consistently trade. Now, looking at this for a 2 to 1 risk to reward ratio, clicking on this, you can see that the percentage to stop loss here now is currently at 0.862%. That is the percentage to stop loss below. And the amount we're risking in this trade is 1%, which is $10. But our order value here is amount risking divided by percentage to stop loss, which is $10 divided by this 0.862%. That is the way to get your order value. Now, before dividing this, you can see that 0.862 is on percentage. You need to first of all convert it to decimal. So in order to convert it to decimal, you're going to say 0.862 divided by 100, right? Because that percentage represents 100. So the correct answer to that will be 0.00862. You've converted that now to decimal. Now we now go back to what is the calculation now. 10 divided by, which is the 10 is the 1% you're risking. 10 divided by 0.00862. So we say 10 divided by 0.00862. And our correct answer to that is 1,160.1, right? So that is going to be what your order value will be, not $10 now. So now you come to the Bybit, then you put the 1,160.1 there, 1,160.1 as your order value now, not $10 now, okay? So that is what your order value is going to be. So now if price makes it back to this point into your entry and then you take the trade, right? Your order value is going to be 1,160.1 rather. So the next thing you want to take into consideration now is this market here, right? You're not entering the trade at the moment. You're not executing the trade right now. And if you want to place the order for a future reference, meaning that if price gets to that entry point, you want to take the trade. So what you want to do is you can decide to set a future order at the moment, which is limit. We call that limit. You're not taking the trade right now. You just want to set the order for when price gets to that point of your entry, it will execute by itself. Then you come to limit, click limit, okay? Now, what price do you want that order to be executed, which is this price here? You go back to your chart and say, okay, what price is that? You can see now that the price is currently around 85,237, which is around this point here, 85,237, right? You can see it at your left hand side here. Then you come back to Bybit and put the 85,237, okay? Now, what is the order value? The order value, don't forget, is 1,160.1. Then 1,160.1, okay? That is it. And then you input your take profit and your stop loss. You have to make sure that you click on it here. And then your take profit. Come back to the chart. Look for where your take profit is. And you can see above here, you can see your take profit is at 86,707 at the top here. Come here and put 86,707. You can see that if you win the trade, you're winning about $19 to $20, which is making $20, right? And then your stop loss is at 84,502 below here. You can see it below here, right? 84,502. You come back and put the 84,502, meaning if you lose the trade, you can see it below here, you're going to lose just $10. You can see that the fact that you actually have the order value as 1,160, right? And then if price gets to your stop loss, you're going to lose the $10. Okay? That is how to calculate the position size. And since we're actually going in for a 1 to 2 risk to reward, if you win the trade, you're winning about $20, which is a 1 to 2 risk to reward ratio. Okay? Another thing that I want to explain now is this 3x here, which is the leverage aspect. What this means is that you actually have available balance here of 1,023, right? Good. Now your order value here is 1,160, which is a little bit above the available balance. So what this leverage does is it helps you increase your available balance automatically to 3 times the amount or 4 times or whatever you want to increase it to. So we can decide to even increase it to, okay, it's currently on 3x here, right? So let's leave it at that. That automatically means that you have 3,000 plus available to trade. So it is more than enough to cover up the order value. So that is what leverage means. It means that your available balance right now, right? And if you increase the leverage to 3x, it means you're trading with 3 times the available balance, which is enough to cover up the order value. Does that make sense? Let's say you have available balance of 1,023 and your order value is currently at 500, right? You don't need to increase the leverage. You can leave it at 1x because the amount is still more than enough to cover up what you have for the order value. Now that that is taken care of, what we can do now is to initiate the trade, which is click on long below. Click. Right? You can see order successfully filled, order submitted. You can see below here now that we have the order here, right? So whenever price gets to your entry point, it is going to trigger by itself automatically, right? And then it's going to come into this position below here, right? But right now it's currently on order, is yet to be filled until price comes to your entry point here at about 85,237. Now that you understand that, let's take that off by clicking on cancel here. You can see you can cancel or modify it below here, but let's cancel it and explain something else. I've cancelled it, okay? Now let's look at markets. Let's come back to this limit and change it to market. What does this market means? It means that you want to execute the order immediately. So wherever price is at the moment is where you want to execute the order. Now let's take, for example, price has now eventually made its way. You've not really executed any limit right now. You've not clicked any or placed any limit order, and you waited for price to make its way down to your entry point, right? And now you want to enter the trade yourself, right? Price is currently at this 85,237 area. Okay, it's currently there right now, which is where the current market price is. Now what you want to do is just come to this place, change it to market, and then input the order value, which is 1160.1. 1160.1. Okay, then once you've done that, all you need to do is just put your take profit and your stop loss, which is the take profit is 86707 and your stop loss is below, which is the 84502. Okay, so just input them, right? Take profit and your stop loss, and then click long, right? Immediately the order will be executed immediately, right? That means you're not putting any order for a future price. Immediately you will just see it in positions. The order has been filled, and then if you're making money, it will start reading to your point, right? And if you're losing, it's going to start declining. That means you're currently in the trade right now. So don't forget to put your take profit and your stop loss, so that if price gets to your stop loss, you're going to lose just the 1% you risked, which is $10. And if it gets to your take profit, you're going to win the 2%, which is the 1 to 2 is to reward that you initially plan to take. So I hope this makes sense, and I hope it helps in your journey towards learning how to trade the futures market. Don't forget to like this video, okay? Just like this video and share it to anybody you feel like is finding it difficult to understand the futures market or how to trade it. And I'll see you in the next.